Good morning. It's Tuesday, November 7th, about 6 a.m. Central Time. Overnight, the precious metals are under significant pressure after yesterday's warning signs. You have December gold down $17, 1971. December silver down 63 cents, 22.61. December copper down 5.80 at 3.66. And January platinum down 15 at 9.02. So a number of things that really came out just in the last 24 hours that are putting pressure on the markets. One, from the war effort. Although there's been no ceasefire, the conflict doesn't seem to be expanding. So you're seeing some of the premium come out of the gold market where people are looking for that safe haven trade. So some of that money's been coming out. Also overnight, you had some weaker Chinese trade balance data that also put some more pressure on it. The Royal Bank of Australia, they were in a pause situation. They came out, they hiked rates 25 basis points, and Fed's Kashkari said it was too soon to declare victory over inflation. So it's just a number of different things. The dollar index also bouncing. It's up about 0.5% off of those 7-week lows. So really just a lot of headwinds out there. Now, fortunately, 10-year Treasury yields and 2-year Treasury yields aren't really rallying at all. They're still negative right now. The 10 years down 5 basis points at 460. The 2 years down 1.5 at 486. But it just looks like you really had some warning signs on these precious metals. There was no follow through. It was unable to break out over those Friday highs where it hit that 2020 level, despite it seemed like the Middle East was coming unhinged. We saw a breakdown in prices and then finally this correction lower. So although the current trend on gold is bullish, you look at your new resistance points. Well, now it's the 200-day moving average, which was old support. Now new resistance, 1983. Psychological level above that, 2000. 2020 above that. Your support levels, it's going to be this pocket support, 1950 down to 1944. That's your 50-day moving average. And your trend reversal points, 1936. Remember, gold was in a bad situation before this conflict started. And it started with a short covering rally that was explosive, went up $150. And now, if there's not any kind of expansion of this war, you're going to see people cash in and people are going to run for the doors. So you look at the silver market, it is neutral. It never captured that bearish trend, in my opinion. Your resistance point, 50-day moving average, 2303. 200-day moving average, 23.85. Your support level is going to be 22.50, your first one, which is only about 10 cents away as of this recording. And then your trend reversal points, 22.35. So if we break on a closing basis from there, you're going to see people run for the doors as well. So overnight, I think because of the trade balance data, you got crude oil down over $1. You got some of the grain markets all under pressure. The dollar index, again, up 50. And again, your yields, they're not positive, but they are kind of hanging in there. And U.S. equities are under pressure. So we might have seen an intermediate top on U.S. equities at the moment. So we'll see what happens here. You got any questions? I'm jumping on the Schwab Network in about an hour and 15 minutes. So at about 7:05 a.m. Central Time, I'll be on the Schwab Network. But if you guys got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck and good trading.